This is the second part of a 2 video series on what to do while you're in school borrowing. And now this is the second video, which is once you drop below halftime or graduate and enter grace period, what can you do to successfully set yourself up to repay your student loan successfully? And the reason I want to talk about this is because we get questions all the time, obviously, for those who have already paid their student loans. But we do get questions for people who have started repaying their undergrad loans and now want to go on and take out more graduate school debt. This is why we always want to talk about and help people borrow sustainably. That was the first video in the series, so that they can better manage their debt now that they're going to start repaying soon. Okay, so that's what this video is going to be about. We're going to talk about what are the actions you need to take while you're in grace period, okay, to successfully pay your student loans. Okay, so grace period is generally 6 months after you graduate for federal loans. Private loans may be slightly different. Again, it totally depends on the private lender. Okay, understand exactly when your grace period ends. That's very important. Your grace period ends October 17th. Do not wait until October 16th to figure out how, when, where you're going to make repayment, because it will likely end up in a late payment. Okay, so I would try to understand at least a couple months from the ending of your grace period. As soon as you drop below halftime or graduate, I would immediately find out when is your first payment due. Even if it's due in 5 months from now, it's good to find out that date, put it in your calendar. And then I'd say 45 days to 60 days ahead of your grace period ending, set up your payment in auto pay. Trust me, you do not want to forget about it. And then it turns out, oh my gosh, I forgot about it and I didn't set up my payment, and you end up making the first 1 or 2 payments late. It will ding your credit and there's no reason for it. Just set it up immediately at about 45 days on auto pay, so you do not forget about it. Okay. If it is, the third tip, those are 2 quick tips to make sure you don't miss your payment. The third tip is really understanding your budget. And the first video, I talk a little bit about a lot actually about sustainable borrowing. And this is why. It's because, and the pro tip is to try to borrow under your first year salary amount in your total balance, right? And the reason that is because you do not want your payment to be so big relative to your income that you have to budget a large percentage of your after-tax salary or after-tax job, whatever it is. Even if you don't have a salary, you're working hourly, you do not want to be budgeting 50, 60% towards making your student loan payment. It's just unsustainable to pay that amount of money. So it's really important to borrow less for your degree than what you're going to earn in the first year. Okay. If you have not yet started a job or have found a job but has not started yet and your payment is due, there are options to go into income-driven plans. Do not put your loans into forbearance or deferment. I highly do not recommend that because that does not count towards a payment. But if you get on a plan based on your income, which may still be zero, you get that time counted. Let's say in the event you end up going for long-term income-driven forgiveness, right? It's good to have payments count. So do not go into forbearance or deferment. Those do not count as payments. I'd recommend that. So number one, understand when your grace period is. Number two, put your payments in auto pay. Number three is really understanding your budget. And if you borrowed sustainably, you should be able to afford it. If you have not found a job or can't afford the payments because you did not borrow sustainably, unfortunately, many people do that, then there are repayment options to consider. Okay. So understand your budget is step 3. Step 4 is if you cannot afford that payment in your budget, explore repayment options. I always recommend income driven over graduated plans. I do not recommend extended or graduated plans. Extended plans are you take, instead of paying for 10 years, you're paying for 20 years. I do not recommend that because you have to pay off all the interest regardless. Whereas income-driven plans, you may not have to pay off your interest and get loan forgiveness based on your ability to pay, but it doesn't automatically extend your repayment period. It depends on your employer, right? I definitely do not recommend graduated plans either, because that means your payment keeps going up and up every 2 years. So I definitely do not recommend extended graduated, because that means it's extended by 20, 25 years, plus it increases every 2 to 3 years. I do not recommend graduated or extended, okay? It just means you're paying off the balance over a longer period of time, which accumulates much more interest, whereas an income-driven plan or income-sensitive plan depends on your income. So explore the right payment for your budget, okay? Those are my tips. I don't recommend considering refinance. I just don't, unless you make a lot of money and you know you could pay off your debt in 3 years and you want to lower the interest rate as much as possible. I still don't even recommend it then, because you could just pay it off in 3 years, and the interest rate really doesn't matter as much because you're just going to pay it off. People forget that your payment is based on not just the interest rate. It's like a triangle, but the timeline to pay and the balance. You can control timeline to pay, and you can control the balance. Timeline to pay you can control by paying more money or by putting lump sum payments, right? So it's not just interest rate. People fixate too much on interest rate. I really do not recommend people forego federal protections to privatize their loans, because the federal protections that you waive can be really meaningful. Like, you don't need a cosigner on federal loans. If you die, nobody's required to repay your federal loans. Whereas if you took a private loan with a cosigner, they're still going to be required to pay. I'm not saying all private loans, but a lot. So you give up all these protections that I do not recommend refinance at all. Literally, do not do it. Just accelerate your payment if you can. Okay. Lastly, if you do not know how much you're borrowing, exactly where your servicer is and all that, you should go to student aid, and you should log into your account and figure that out. And I would say do that at the 45-day mark. Okay. Do not wait until, like I said, the day before. And of course, life is unpredictable, and prepare for challenges. If you have a health challenge, or you are going to start a family and now we'll have financial constraints, prepare for all that. You can prepare for it staying in the federal program, and your payments can become more flexible if you stay in the federal program. Okay. So know that life is not always a straight line and the same. Just because you can afford something now, you're young and carefree, doesn't mean you're going to feel the same way in 6 years from now or 10 years from now. So that's my advice for what to do while you're in grace period. Okay. Review your loan details, explore repayment plans, create a budget, set up auto pay, and contact your loan servicer if you have questions. If it's a federal loan, you can go to studentaid.gov. If you're a parent borrowing loans and have no choice but to borrow, you should still try to follow tips on sustainable borrowing that I did take in the first video. And thank you so much for watching. Let us know if you have any questions. Again, if you need repayment help, understand what plan's best for you, myloansense.com. You can get a free plan, and we are here to help.